What do you make of the bluster? And I'm assuming that's all it is on both sides here, whether it's an additional 100% tariff or cracking down on rare earth magnets if you're President Xi. Is this all posturing for a meeting, or are we in bigger trouble than we think?
I think it's a little bit of both. I think just to take a step back, you've got the two largest economies in the world,
Yep.
deeply integrated with one another, deeply uncomfortable with the fact that they are so integrated with one another. And whether you call it decoupling or de-risking or slowly trying to pull that apart is very hard to do without creating a lot of waves and a lot of blowback elsewhere. I think what's really interesting right now is for all of the issues we have on the table with China, whether they're military, diplomatic, human rights, the president is focused very narrowly on an economic deal, and then within the economic space, very narrowly on a tariff export control kind of deal.
Yes.
So it's almost going to be a tariff for rare earths or our technology exports for their rare earth exports. And all of the rest of it is going to be left unanswered for now.
Which has been the case with a lot of these framework deals, that they are quite narrow and might need further negotiating. Is the market kidding itself, though, to think that this meeting is going to change something? I mean, we're right near all-time highs, as we've just established, Christopher, and I don't want to turn you into an investment strategist here, but sometimes it's hard to justify what we're seeing when we know how scared Wall Street is of this not working out.
Well, I think they are scared. It's very hard, I think, for investors to price in tail risks.
Yes,
right?
Sure.
So they're focused more on the good earnings that the banks delivered yesterday,
Right, yep.
the GDP numbers that we may or may not get
AI.
anytime soon,
Right.
the AI story, the deregulation story, the big beautiful bill, and the impetus that's going to give a lot of CapEx next year. So that is what I think is driving markets right now, and that's sort of the base case that everybody has, but everybody's looking over their shoulder. On the one side, there's the China risk. On the other side, there is the tariff blowback risk. And then there are just a whole lot of supply chains that have yet to work through all of these tariffs.
Yeah.
And that's, I think, high on everybody's mind as well.
Stephen Myron, speaking earlier today, self-labeled as out of consensus, says the very uncertainty that the president is creating here with regard to tariffs is the reason why the Fed should cut interest rates. And that's been, well, that's going against the grain of what Jay Powell's been saying this whole time. He's been holding off on cuts because of the uncertainty, not knowing what the impact would be. Does Stephen Myron end up being right here?
Well, it's not anything I learned in my economics classes or in my investment career. I think
out of consensus.
It's out of consensus, and I think Stephen Myron is staking the ground on the out of consensus trade in his earlier speeches about what R-star should be, what's a natural interest rate for the economy, and I think he's got a view. We'll see how he's able to convince any of his Fed colleagues whether that view makes sense or not, but I'm not sure the market is buying it.
Well, no, I think that's clear, and I wonder as well about what comes next with regard to the government shutdown. We're talking about mass layoffs. I just saw a headline roll that it wasn't just 4,000, that Russ Vought saying just now on the radio that will probably be higher than 10,000. You add that to all of the early retirements and some of the buyouts, if I can even call them that amounted to about 250,000 federal workers. Add another layer with mass deportations. And we've got a job market that looks a lot different than it did even a couple of months ago, Christopher.
Yeah.
That would prompt interest rate cuts, presumably. How are you looking at the market?
I think that's right. I think, everybody who is so excited about AI and the CapEx story is also looking very closely at the weakness in the labor market.
Yes.
And that continues to unfold right now. And these moves with the government shutdown, what is remarkable is that it's the largest government and the largest economy in the world, and it's not really a top news story anymore, which I think means that neither side is interested in getting this settled anytime soon. And I think if you're an investor, you have to not just sort of assume at one point or another Chuck Schumer will call President Trump or the other way around and we'll get a handshake and a deal.
Yes, right.
This could go on through the end of the year,
Sure
and I'm
could.
not sure markets are thinking about that at all.
And I'm hearing that a lot more often now. Even the Speaker of the House said this could be a record setter, and clearly President Trump is not looking to budge anytime soon, which is all the more reason why there's confusion about Argentina. I want to ask you about this while you're here, and we'll start with what the president had to say in terms of America first and his agenda economically. Let's listen to President Trump.
We're going to work very much with the president. We think he's going to win. He should win. And if he does win, we're going to be very helpful. And if he doesn't win, we're not going to waste our time, because you have somebody whose philosophy has no chance of making Argentina great again.
Okay, and he's sitting across from Javier Milei when he's saying this. I'm a little confused, because apparently this money does not arrive if Milei doesn't win the election, for starters. But $20 billion was the number yesterday. This is now, I think, up to 40. What was it, James? 40 or $60 billion, the headline?
I think 40.
That we just ran, $40 billion. So twice what the president said,
yeah.
Saying openly that this really does not help America, that we're investing in good politics and a good friend in Argentina. What are you calling this?
I don't know what the word for it is, frankly, but it's sort of interesting to see the president say, we're going to bet on this guy if he wins, but if he doesn't, we're going to pull our money out.
Right.
Which may be too late.
So a conditional bailout is.
There are lots of questions about Argentina and this particular set of bailouts, because, first of all, Argentina is not a military ally. Argentina is certainly not systemic to the global financial system. We seem to be backing a horse in an ideological race for economic policy within Latin America. And it is, frankly, the first time that U.S. taxpayer dollars have been exposed to the Argentine peso directly.
Wow. Yeah.
The $20 billion seems to be a currency swap with the Argentine Central Bank. And then what was announced today, apparently from Secretary Bessent, was another $20 billion of private banks and other investors willing to put money to work. I'd love to see what that list is.
Indeed.
And who is ready to sort of take that leap of faith about Argentine midterm election outcomes.
Yeah.
So this is a head scratcher.
Well, okay. This administration has been, in many ways, original. Is this a first?
Well, it is. I mean, the last time we did anything close to this was with Mexico in the bailout with President Clinton, and those were actually backed. Our loans to Mexico were backed by Mexican oil reserves. Yeah. So there was a lot more going on there. Wow. Already, as you may know, as you do know, Argentina is $40 billion in the hole to the IMF. So, it's got a big hole to fill if it's able to turn things right.
Some of the backroom conversations at the IMF this week in Washington are focused on this quite deeply. There are a lot of head scratching, to your point.
And as you pointed out earlier, it's very off-brand for a president who's putting America first.
Yes, right.
It's something that we've always thought that IMF involvement to help emerging markets with good policies grow better is always in the United States' interest. This sort of backdoor approach, end run around the IMF, is new and different, and, as I say, off-brand.